Hope everybody's doing well. My name is Clayton. I am the owner of Centurion Growth, our business consulting and business asset management firm, as well as Centurion Education Group, our multi-platform education, financial literacy company. And today I'm bringing you part 2 of the covered calls and covered puts video series, where I go over one of my favorite ETFs that I use and the numbers that I am producing in regards to percent return, cash, etc. on that ETF through the use of covered calls and covered puts. And we're going to get right into it. In the first part, if you haven't seen it, please go check that out. In the first part, I go over how to execute a covered call and a covered put on the Thinkorswim platform. Right now, I'm using the Thinkorswim. Thinkorswim trading platform, and this is my paper trading account. All right, so that I can give you guys the options chain and give you examples of data that is available and happened today on 11/16/2022, so that you guys can see numbers of what it is that I'm doing at this very moment, present time in the market. So let's talk about a couple different examples on both covered puts and covered calls for TQQ. Now, what is TQQ? TQQ is the triple leverage of the NASDAQ, of QQQ. All right, so that means 3x to the upside, 3x to the downside, okay? And that scares a lot of people, right? It's very volatile. TQQ's all-time high price back in January was $91.68, and we're at $22 a share right now, as you can see at the top. So that means it's fallen quite a bit. Now, if you believe in the NASDAQ and the S&P as much as I do, you're not sweating whatsoever, knowing that the NASDAQ and the S&P over time will recover. And so will the double and triple leverages that are associated with the S&P and the NASDAQ, okay? Okay. If you can handle a little volatility, and with covered calls and covered puts, you can generate some cash flow, both on holdings, your shares, as well as cash that you keep in your portfolio, then you aren't sweating at all. You are as happy as can be, just like me. Let me show you why I say that. So, let's go over 2 examples for both sides, both covered calls and covered puts. 2 examples are going to be if I get exercised and if I don't get exercised, all right, for covered calls and for covered puts. Let's say I buy my shares at 22 and I sell a 24 strike call for TQQ. Okay, let's clear the calculator so I can get ready to show you some numbers. So I buy my 100 shares at 22 so I can run my covered call. So it cost me $2,200 to buy the 100 shares. Then I sell a 24 strike. And let's say TQQ at expiration is below my $24 strike price, which would mean this covered call would expire worthless, which means I keep the premium. So I come in here, and this is if I were to sell that call, right? Covered calls are bearish, right? So if the stock price goes down, the premium drops, okay? When I sell the call, I'm credited initially 35 cents, and then at expiration, if it expires out of the money, it will expire worthless, which means that contract will have no value, and I will keep the full $35 in premium. What does that mean? I profit $35 if TQQ does not go above $24 a share. So in the first example, TQQ is not going to go above $24 a share, and I keep the full premium. And I divide that by my initial investment. So that is a 1.5% return in less than 2 weeks. But for the purpose of this example, I'm going to round it up to 2 weeks, make it a little bit more conservative. All right? So I've achieved a 1.5% return in 2 weeks, or 1.59. Right? So 1.59 or 1.5 is 3% per month. And 3 times 12 is 36% per year if I don't get exercised. Okay? That is a phenomenal return, and that is just cash flow. If I don't get exercised, what does that mean? That means I still own my shares. Okay? I still own my shares at $22 a share. And previous all-time high value, when the market recovers, at this present time, it's at 22, but when the market recovers, TQQ is at 91.68, which is why I choose to use this ETF, because I love the NASDAQ and I would rather run and not walk. And what I mean by that is if I'm going to buy a QQQ, that's great, and it's going to provide me a phenomenal return from this level back to previous all-time high, 30, 40%. But TQQ is going to go from 22 to 91 as long as the NASDAQ recovers, which I feel like is a very high probability of occurring, more so than an individual security, which is why I choose to use these ETFs to get the returns that I would like to see. Right? So my principal appreciation of my holding is exponential, but the cash flow is also quite phenomenal. So whether TQQ goes up or down, I have cash flow. Okay? And 36% a year is phenomenal. That's gross, by the way, but that's still phenomenal. All right. So let's talk about an example of me getting exercised. So I buy at 22, and I get exercised at 24. So TQQ has gone above $24 a share by expiration. So let's talk about the profit on that. So I got credited 35 cents in this example. So that would be $2 per share change from 22 to 24 times 100. So that would be $200 plus 35. And I divide that by my initial investment of $2,200. And let's say that took 2 weeks, all right, because this expiration is a week and a half from today. Say it took 2 weeks. That is a 10.6% return in 2 weeks. Most folks don't make 10% in a year, and most individuals will not make 10% this year, not even close. Okay, the S&P 500 is down 20%, the NASDAQ's down 30-something%. At least that's where it's been hovering. It's gone up a little bit, it's gone down a little bit, but that's where it's been hovering. And it's been falling since January of 2022. Okay, most folks won't even make 10% this year. Here's a phenomenal way to do it in 2 weeks. All right. So that's if I get exercised. All right, so either way, if TQQ goes down, I'm profiting. If it goes up and I get exercised, I'm profiting even more. All right. So if I were to get exercised and lose my shares, then I have no more shares. I'm just cash. So what do I do with that cash? I come over to TQQ, the put side of the aisle on TQQ, and I sell a 20 strike covered put. And let's say I get credited 36 cents. So I'm going to click the bid, open up that sell position. I'm going to send that through, and I will have a covered put at a 20 strike, which means if TQQ is below $20 per share on the 25th of November, then I will be exercised and I will have to buy the shares at $20 a share, which will cost me $2,000. Okay, $2,000. Because it's 20 times 100. So, and I will have to have $2,000 in cash in my cash balance in order to run that covered put. All right, but let's say TQQ doesn't quite get down to that number. All right, doesn't quite get down to 20. That means at expiration, if TQQ is above 20, I keep the full $36 in premium. All right, 36 divided by 2,000. So if I don't get to buy the shares, at least in a 2-week time frame, well, less than 2 weeks, but at least in a 2-week time frame, I make a 1.8% return. Not bad. 2 weeks, not bad. That is 3.6% a month. Okay? And 3.6 times 12 is 43.2% per year in cash flow without me owning any stock if I don't get exercised. All right, but when I get exercised, I make more anyway. But if I don't get exercised, that's some pretty good numbers for not owning any stock. Pretty good numbers. Can't complain. There's a lot of folks who can't even do anywhere close to that, especially on the institutional level as well. And if your assets are not actively managed, getting a 43% return is a pipe dream. Sorry. God's honest truth. So, let's talk about if I were to get exercised. Okay? If I get exercised, I buy my shares at $20 a share, and then I go right over to covered calls. Okay, that's the full wheel. All right, that's the full wheel. And the reason why I'm so adamant about this and so excited about it is I used to live, a little background on me, I used to live in a basement with no windows. It was basically a shipping container. I had a desk, I had an air mattress, and a computer, and that was it. That was it. When I first moved out, that's all I could afford. I dropped out of college, started working full time, and that's all I could afford. A little basement, just a little box. And what gave me the financial capability to leave my job after a couple of years of work was that I ran covered calls. I ran covered calls and covered puts, and it paid for my bills. And the appreciation of the stock is what grew my portfolio. And now I run these cash flow models as well as the principal appreciation, because TQQ is going to appreciate long term. I get both the cash flow and the appreciation of the holdings, and the combined, they make a phenomenal return. And I do that for businesses that I manage assets for, so that businesses can expand. Okay? They can pay for marketing. They can cover their employees. They can cover their contractors. They can do whatever they need that's under the business expense category. Or they can take it as income if they wanted to. Whatever they'd like to do. But they're getting cash flow month over month over month. And then when we complete a cycle, so S&P's at all-time highs, we draw down, I do all this buying, and then we go back up to all-time highs however many months later, completion of a cycle. That's when a lot of money's made on the holdings. Right? But I've also had X amount of time for me to run cash flow month over month over month. So, plenty of time for me to generate some phenomenal returns for businesses that I manage assets for. And this is one of the many ways of how I do it. So, I hope this helped, and I hope this provided a thorough explanation as to what I'm doing on a daily basis. And if you are confused or this did not help the way you would like it to, please feel free to reach out. You can go to our website at centuriongd.com and join our Discord and talk to me live every single day. Okay? And this is a strategy that could help you pay for our Discord once it goes paid in January. But right now, it's free. January of 2023. But right now, it's paid. And this is a phenomenal and very simple and very easy way to make sure that you have your monthly payment done, cleared, and you don't have to worry about it. It's very inexpensive. So, these are the strategies that I deploy on a very large scale, at least large for me. And it produces a tremendous amount of cash flow month over month over month. Right now, I'm averaging gross about 3 to 4% per month. And cash flow, all right? That's not the appreciation of the holdings. That's just the cash flow that I'm running monthly from covered calls and covered puts. So, 3% per month is 36% per year, non-compounding. 4% per month is 48. And yes, I am doing those numbers. All right? Got the transactions, got the accounts, got everything. Not hiding. I know what I'm doing. All right? So, if you'd like to see me do it live, and if you'd like to see some of those transactions, they are all posted. All the alerts and everything are all posted. All the covered calls, covered puts, everything. It's all posted in my Discord. Everything. It's all there. So, this is an incredible strategy that I have spent years now utilizing so that I can produce premium, produce cash flow, and help businesses grow at an accelerated rate that they otherwise would not have been able to with traditional, inactive, or active management that's just not performing well. But this performs well month over month over month. So, if you have any questions, please feel free to reach out. Subscribe to our YouTube, like, comment, share the videos if you think this would help another individual who's trying to trade and learn in the stock market. Join our Discord so you can talk to me live, and follow us on our different platforms, TikTok, Instagram, Twitter, etc., all the different socials. And I'm looking forward to speaking with you guys and hopefully doing business in the future. Thank you so much for your time, and I'll talk to you soon.